Hello everyone and welcome back to the channel. My name is Brent and welcome in. We're going to be doing our M1 Finance dividend portfolio recap for the 14th through the 18th of March 2022. I like to do these on a week by week basis to kind of showcase the consistency of what exactly you can do with your portfolio if you just stay consistent. Invest every single week regardless if the portfolio is down, portfolio is up. We're going to go ahead and break it down every single week. We'll go over 5 topics. We go over the overall performance of the portfolio, whether we're positive or negative. We go over the number 2, the weekly performance of our portfolio. Was the portfolio positive? Was it negative? We can, I kind of changed up my thumbnails recently, so let me know how you like my new thumbnail style. Trying to invest, trying to like showcase something that's kind of going on within that week. And then whether the portfolio was positive or negative, kind of showcasing it right off the bat. Let me know what you guys think of the new thumbnails. And then number 3, we go over the activity of the past week. What did we buy? What did we sell? Our dividends that we've got paid out. Number 4, we go over the portfolio's dividend income. So every week we add money into our portfolio and we buy up brand new companies, right? We're buying shares of these companies for the long term. So these companies grow and pay their dividend. We also buy back more shares. We invest capital into our portfolios, which buys up more shares. So every week, regardless, right, we're always investing more capital, which is growing our portfolio's future dividend income indefinitely to the future. So that's our number 4. We go over how to track your dividends. And then number 5, what stock or stocks are we buying this week? I have one stock in mind that I've been already buying here recently. It's still negative in the portfolio, which is awesome. And I'm really looking forward to just continuously buying this one up until I hit my sort of threshold of where I want to have it at. So with that said, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, let's go ahead and get into the video. So starting off at number 1, what is the overall performance of the portfolio? And we can see we're up 69.04%. We're not back at, market highs. I think at a high, our portfolio had gains of anywhere from $10,000 to $12,000. So we're still off about $2,000 to $4,000 of equity in market gains. Now, our earned dividends will never go down. We're going to continuously earn dividends in this portfolio indefinitely, week after week, month after month, year after year, in this portfolio. So I don't ever have to see the earned dividends worry about that going down. And we can see that our total gain overall between the market gain and the dividend sets at $11,261. So I'm pretty happy with the performance of this portfolio. We're really not that high off of where our peak was. I think we're down around 4 to 5% off our highs. So our portfolio has actually done really well week by week in comparison to, say, the S&P 500. So I don't expect our portfolio to put on the weekly performances bouncing back as the S&P 500 because I didn't have a lot of the tech companies. My portfolio doesn't consist of 25% of the FANG stocks. There's no Facebook, there's no Amazon, there's no Netflix, there's no Google, there's no Microsoft. None of those are within my portfolio. I do have Apple, and that is my number 1 gainer in the portfolio, up 310%. We have Lowe's in number 2, Pfizer in number 3, and Avia number 4. We can see that Main Street Capital has fallen off our 2nd place and 3rd place. It is now sitting in 5th place within the portfolio. We've had some major uptrends in Pfizer and Avia here in the short term. I'm actually considering taking profits in either, just in the short term, taking a little bit of profits. It's within a Roth IRA. I sell off a little bit, kind of consolidate back down to, say, a value that I'm comfortable with, and then I reinvest the rest of the capital into, say, a position that's negative or that I'm kind of building up. So that's just an idea that's kind of in my mind. Now, our worst positions in our portfolio are currently Clorox, down 53%. Not really, right? We invested $2,000 into it. It's down $525. That's a little over a quarter of the portfolio, so it's down around 27% in total. Colgate is down 9.5%. That's more accurate. Starbucks here is down 0.14%, and this has had a bit of a gain in the past week. The CEO for the third time is going to be making a comeback. He was a CEO, I believe, prior to the 2000s and after the 2008 financial crash. And now he's coming back once again from retirement. Every time he comes back, he always seems to boost up the business overall. So that is seen as a very company-wide positive movement for the portfolio or for the business itself. So it hasn't been downtrending as much, and I kind of missed out on buying Starbucks a little bit cheaper than where it's at, but we might have some opportunity in the future once again. We shall see. So those are the overall performance of the portfolio. Now, jumping into the weekly performance here, we can see that we are up a massive 3.06%. Now, you may say that this is fairly large, right, at 3.06%. But when I compare this to, say, the other indexes, right, the S&P 500 on the 5-day is up 6.16%. And that's with a 0.74% loss on Monday. The main thing that happened this week was we had confirmation. When there's uncertainty in the market, there's a lot of volatility and there's a lot of ups and downs. You don't know what's expected. So the main the uncertainty that everyone had been waiting for was on Wednesday when the Fed was going to come out. Were they going to be raising rates by 0.5% to battle inflation very rapidly, potentially cause the market to go into a spiral to the downtrend? Or are they going to slowly raise the financial rate 0.25%? And it actually ended up being raised by 0.25%. So that is in line with expectations. There was confirmation in the market. There's no longer uncertainty. The Fed's not going to be raising rates as fast as 0.5%. So that made confirmation in the market, and that was positive overall for the market. That's showing that long term, there's a lot of confirmation that's happening in the market. The Fed's not going to be coming out there and raising rates 0.5% to meet their expectations, I believe, of 2.5%. So that's not going to be rapidly going and taking effect and bringing down the market. They're going to be going at it pretty slow. So that was really positive. We can see 6.16% there on the week. And the Dow Jones, 5.5%. The NASDAQ here put on a whopping 8.18%. I don't think I've ever seen the market put on an 8% gain in a single week. I would really have to go back over the past several years that I've been kind of monitoring the market more in depth, but I don't believe I've ever seen an index here move up 8.8%. And that's with a loss of 2% on Monday. Imagine if there wasn't a loss on Monday. Imagine if this was 10% on a single week. They are still in last place as far as indexes. They're in last. They're at negative 11.19. Followed right behind by the Russell 2000 at negative 7.09, followed right behind by the S&P 500 at negative 6.36, and our top winner here, down only 4.36, is the Dow Jones. So our portfolio, our portfolio sits more in line with that of the Dow Jones. We're not off, we're not too high off our highs here. If I go back and look at the overall, our highs are right up here. We didn't take like this gigantic dip. This is when I sold off a good chunk of my portfolios. I bought back into the market right about the 14th, 18th, and then that's when the market had kind of downtrended. So we're really not down off our highs by much. And over the past 1 week, we can see that the best performing companies had been Starbucks, IIPR, JP Morgan. So these ones right here, Pfizer, UGI. So we have a REIT, we have I don't know what I would kind of consult, restaurants, I suppose, financials, biotech, utilities, another biotech, and Lowe's here, Apple Tech, kind of interesting little bunch of different, many different areas kind of grouped in there. The worst performing ones this past week are Lockheed Martin. Now this one I may end up taking a bit of profits before it kind of comes down a bit more. I think there was a huge run up within Lockheed Martin, and it may be time to just kind of take a little bit of profits. Let's go ahead and remove Starbucks from here and take a look. Okay, so yeah, I'm not gonna, it may kind of retrace down to 401. but it's really hard to kind of know. So I should have taken profits potentially up here after the big run up. It's not worth taking profits now, so not going to worry about that. So ABM Industries down 3.11%, Lockheed down 2.93%, Hormel Foods down 2.41%, and so on. Not a lot of negative in the portfolio overall, but a lot of green. Now, another thing I've been considering is here we have Pfizer running up 8.43%, and it is now in one of the top 4 tiers of our portfolio. We can see it's up 126%. So when I take a look here at Pfizer, and this is one that, okay, it has had some highs of near $60. I know it's had a huge run up here shortly in the short term. It bounced off their 50-day and 200-day moving average. You know, it's kind of a wiggle room right here. At first, it kind of broke through the 50-day moving average, kind of retraced, hit, and bounced, and then went all the way down to its 200-day moving average. Actually broke it for a short time and recovered, and quickly broke right through that 50-day moving average. Now, it may use this as support now, but we shall see. I don't think Pfizer's out of the woodworks yet, but it definitely is moving in a positive direction. Okay, so it's not really looking like it's too worth it to sell. And another one here, I would really like to kind of take profits on one of these. So here, for example, AbbVie. I have no problem taking profits on AbbVie at this moment. It has definitely been high flying for quite a while with really no retracements in sight. I wouldn't mind selling a tiny bit out of AbbVie and then moving it into some of my newer positions that I'm just trying to build up here in the short term that are actually beat up a bit more. So we'll talk about that just here a little bit as well. So let's go into the activity for the past week. If we take a look at the activity, we had 2 buys last week. We had Starbucks and Cisco Systems. Let's go ahead and throw Cisco in there as well. I'll take a look at that one as well. And we received several dividends. Now we received $8.54 from Main Street Capital, $6.77 from Realty Income. Now these two together, they are monthly paying. You know, Main Street is a BDC and Realty is a REIT. So real estate there and business style. Together they pay out monthly every month $15.31. And that's going to go forward. You know, they're going to continuously raising. I believe that recently announced the increase. I don't know if that was now in this payment or in the upcoming payment. So if I go back and take a look at Realty Income, I'd have to go back next month. $6.77. So yeah, they're paying the same right now, but in the future they should probably raise their dividend. I believe the next monthly payout. And then we have Avery Dennison paying out $4.83 for a total dividend this past week of $20.14. And then we made our deposit there of $127.66. So we have a total to invest this week of $147.80 into our position that we kind of want to buy into this portfolio. Now, with that said, let's go ahead and update our dividends here. So we head over to the M1 Finance portfolio, and we did again buy 2 companies this past week. We had purchased Starbucks, so SBUX. If I go over here and search up Starbucks right here, I can go ahead and click on the pencil. So here, Starbucks had been paying me $8.20. So actually, before I do this, SBUX, let's go up to the top and capture what our annual income is, which is $1,160. Now let's go ahead and update these right here. So Starbucks, we are now at can't just copy that, of course not. 5.03907 shares of Starbucks at $89.70. Look at that, we reduced our cost basis by a good chunk right there, actually. So we went from like $90 to now $89.70. So right here, our annual income went from $820 to now $988. So that's a nice little increase there, about $1.60, right? And then we had another company that we purchased last week as well, and that was Cisco. not Cisco, the tech company, but Cisco Corp, the food delivery. In this one right here, we now own 21.91266 shares of Cisco Corp, and we have a cost basis of 57.39. So let's go ahead and go and look up Cisco right there. And we now own 21.91266 shares, and our cost basis went up to 57.39. 57.39. So in this case, I did increase my costs per share just because I believe that little dip that it did have this past week, it was worth it to buy more of it during that. I think I had an 8% dip. I would have to go back and take a look at this company, but I believe that last week it had about an 8% dip. I bought more of it last week, and then I'm not going to buy any more of it at this moment, but we did increase our dividends there as well. I didn't see what it had been prior, but this one pays out $41.20 for the year. So it's a nice little dividend right there. And our annual income increased from 1,160 to 1,163. So we increased our overall annual income by $3. If we do this every week, right, we're increasing our annual income by $3 every week over the 52 weeks. Every week that we invest, we're increasing our annual income by roughly $156 on the year. And that kind of compounds with the dividends that we're also receiving on a weekly basis that we just reinvest into this portfolio. So I'm hoping that I probably won't reach $1,500 by this year, but say by next year. By the end of this year, I should be sitting at around $1,300 of annual income. And next year, potentially by the very end of next year, I should be sitting closer to about $1,500 of annual income within this portfolio. And I don't have a very high yield. My portfolio yield is 2.75 with a cost basis now of 3.28. So that's the portfolio income of this portfolio. Now, what stock are we buying? So obviously, I did buy some Cisco last week. I don't think it's at the best opportunity now. We can see that it had a nice little run up. I was trying to buy it during these little dips right here. So I did buy a little bit more down in the dips here. We can see that it did break through the 50-day moving average. I may use that as support right now, but I'm not going to be buying any more of it at the moment. If it retraces back down into the 70s, I may end up buying just a little bit more. But for the time being, I think there's more opportunity out there. Now, AbbVie, as we had kind of discussed here, over the past 1 year, this one's just been blowing up. There's really nothing in sight as far as like stopping it. But, like I kind of told myself with Lockheed Martin, when I see these high run-ups for quite a while, they're going to lose steam. And I kind of want to take profits on, say, AbbVie, now that it's nearing 160. I don't mind taking just a little bit of profits. And what are we at right now? Let's go back into a Roth IRA and take a look at AbbVie. We have $1,500 of equity within this portfolio. We can see that overall we're only up. Oh wait, that's on the week. Okay, so on the overall performance, we're up 122%, about $850 of straight profit. So that's actually really, really good. I would actually be more interested to just sell up probably about $250 of it. Not very much. It's not a lot. And Pfizer here, I don't want to sell off any Pfizer at the moment. Lockheed Martin, that one already pulled back quite a bit. And Starbucks is the one that I'm planning on buying. Had a bit of a bounce off that $80. Now this can continue to trace back down, and it could just kind of fall off a cliff. But I don't know if that's going to happen. I think that this one is beginning to kind of turn around. It hit $80, had a sharp recovery. I think with the CEO kind of coming back into play, this one may kind of help stop its descent and either trend around in this area. Now we've had a low of $80, so this could retrace back down, but I'm not done buying this one yet. I'm just kind of building up this position right now while it's down in the 80s, down in the 70s as well. So what I can do here is go over to Avi, click buy sell. We're going to go ahead and select sell. I'm going to go ahead and remove about $250 of equity from this portfolio and from this position and confirm that. So now we have $397 of buying power. And I can go ahead and take a look here. Anything else I'd want to kind of shave away a little bit, but I don't believe so. I think everything else I'm pretty happy with. And I'm going to go ahead and go into Starbucks here and buy sell. And we're going to go ahead and put in $397. So that'll kind of bump up this position about $400 worth. And our current value is $451. So that's going to put us about $950 of equity in this position. So I'm pretty happy with buying a bit more of Starbucks. So, I'm not going to be done yet. I'd like to continuously buy more Starbucks until it gets to about anywhere from $1,500 to about $2,000. We can see UGI. UGI has actually gone positive in the portfolio. Not one that has had a really good track record. I think this one I had added into my chalk block for a while, but it just hadn't. Let me go ahead and remove Starbucks here. Oh yeah, we can see it dropped off a cliff here in the short term. I would have really loved to have sold it off prior to 2022. I'm not sure how long it will kind of last in this price. It's utility. Utilities have been doing really, really well in the short term, but I'm not sure what's going on with this one. We can see its earnings per share. It's kind of on the downtrend. So I'm not sure on this one. Should I keep it in the portfolio now that it's positive by 3.9%? Is this a good opportunity to just kind of sell it off, reinvest the equity elsewhere? It offers a 3.91% yield. So that's something I might consider selling it off in the future, but we shall see. It's had a really nice run up here in the short term. I'm not going to remove it yet, but it is in my notes here to kind of chalk out of my portfolio when it went positive. So that is something. It's not truly positive. We can see here we're still down market gains. The only thing that's showing as positive is because we have earned dividends within this portfolio, from this company that have been reinvested probably elsewhere. I don't think it kind of tells us in here. It would be nice to have, when you click into a company, how many times have you purchased this one? It doesn't tell us that here. Let's see if I go into UGI details. Yeah, it doesn't tell me the last time that I kind of purchased it. If I want to get that information, I have to go into the activity and then go into the symbol and type in UGI here and click on it, and then I can kind of see that I did buy it the last time back in July 26th. So if I look at July, and let's see here, what was it? It was a buy in July of 2021, in October of 2020. So let me go ahead and remove some of these little things right here. Yeah, so I bought it up in this time frame up here. I bought it, this is the reason I'm so positive on it, is because I bought a good chunk of it back in 2020 when it had been kind of beat up. And we can see over the long term, 10 years here, it really hasn't been doing anything. It's actually on a bit of a downtrend. We can see its earnings per share pulled ahead very nicely. I think I kind of talking myself into this one, just kind of remove it from the portfolio. It's been in the portfolio for quite a while. Started buying it back in 2019. It's been doing pretty much nothing in the time frame that it's kind of purchased it. So I think I'm actually just going to remove it from the portfolio. So I'm going to go ahead and select buy sell, go in, select all of the equity, actually go overboard, right? Because you don't know what tomorrow is going to be. Tomorrow, right now, if I'm looking at Monday, stock futures are very positive, up 1.5% to almost 2.3%. So yeah, we have Dow up 1, the S&P up 1.43, the Nasdaq up 2.32. So the market's probably going to move higher. So when I sell this position, we don't want to sell it for $500.16. I'm going to sell it for $600 and confirm that and do that as well. So there we go. So now I have an additional $500.16 of buying power. And I'm going to go back down to Starbucks right here, cancel my latest thing, cancel that order. We're going to go ahead and buy up a little bit more. And in this case, I'm just going to invest the total amount of buying power that I'm going to have of $897.96 and confirm. And there we go. That is going to be our portfolio right here. If you guys would like a copy of all of the holdings, I will go ahead and share a link down in the comment section below. Look for the pinned comment, but otherwise that is going to be it from me. We've covered all 5 areas. I'm hoping that the market does pull back a bit more. Too much. I don't see us being. I don't like to be too optimistic in this market right now. We have a lot of stuff still happening in the future, in the foreseeable future. Continuously rate hikes. We have inflation that we're kind of battling. There's a lot of uncertainty as far as our prices on items going to continue to climb. I know oil has kind of came down, but even with the oil, I don't know a good ticker symbol to kind of monitor that right now. But I know it at a high, I believe it was like 115, 116, and it's came down about $85 on the per barrel. But the oil prices out in public when I'm going to refill my cars or just kind of driving by, they haven't really came down that much. They probably reduced their prices by 15 cents, if that. So there's still a lot of costs that are rising elsewhere. So that may be playing a part here in the future. But we'll see. We'll see how the market kind of goes. So that is going to be it for me in the market in this portfolio recap. Let me know down in the comment section below if you guys have any comments or questions. Remember again, if you guys haven't yet subscribed, go down below, hit the red button to subscribe, hit the bell, select the all notifications to get notified for all notifications every time we release a brand new video. If you guys have any comments, suggestions, definitely let me know, and I will see you guys in the next video. Bye bye.